I want to spend a few minutes talking about tax structures, big picture, and also the different kinds of taxes that you encounter in the world. Let me switch to the other screen. Okay, tax structures. First off, tax structures can be defined in three broad categories. The first one is progressive. Progressive means that the more money you make, the higher your income, the higher the percentage of your income that you pay in taxes. The logic here typically is the ability to pay. Those who have the most money should pay a higher percentage of supporting the government because they can, and the poor don't have the money to do it. Let's jump down to the bottom here. A proportional tax. You've perhaps heard politicians talk about a flat tax. That's a proportional tax. And what it is you set a percentage, let's say 15%, and everybody pays 15% of what they make, regardless of what you make. So you make 300,000, you pay 15% of that. You make 30,000, you pay 15% of it. There's certainly a logic there that it's fair, right? It's egalitarian. Everybody pays the same proportion of what they've made. The third type is a regressive tax, which means the lower your income, the higher the percentage of your income you pay. And the wealthier you are, the more income you have, the lower the percentage of your income that you pay. And I think just logically that seems kind of upside down, right? Who'd want to have a regressive tax? Just to recap, look at a little different perspective. Progressive tax, the more you make, the higher the percentage. So if you make 20,000, maybe it's 15%, 30,000, 28%, 55,000, 31%. Proportional tax, no matter how much you make, it's the same percentage that you pay in tax. Regressive, the lower your income, the higher the percentage of tax you pay. Okay, who pays the federal income tax in the US? And I'm focusing on federal income taxes. These are the 2020 tax brackets. They're broken down into single filers, head of household, and married filers. Let's just focus on single filers to keep it simple, and that's most likely the category that you fall in or will fall into. First off, you can see here, this is based on income, and this is the rate. So the federal income tax system is designed to be progressive. It is progressive, right? The more you make, the higher the percentage you pay. Another point I want to make on this, though, is that there's a real misconception out there. Most people think that, let's say you made $200,000, that if you're making $200,000, you're paying 32% tax. That's not the way it works. This is a tiered system. So if you made $200,000, your first $98.75 is taxed at 10%. The dollars from $98.76 to $40,125 are taxed at 12%. $40,000 to $85,000, 22%, and so on. $163,301 up to your $200,000 is taxed at 32%. So, and the IRS would have a tax table, but what it's doing is tiering your income so that each set of income, each bracket of income is taxed at the rate for that income range, and only the top tax rate is only on the marginal dollars that you earned above the previous rate. Well, we all know, though, that this is the way the tax system is designed, right? That the wealthier people are supposed to pay a higher percentage, but we all know that because of tax loopholes and stuff, the rich don't pay their fair share, right? Well, bullshit. Here is the tax stats. This is from 2017. This is the most recent I could come up with. And it breaks the taxpayers down into the top 1%. This is the 1% of the country with the highest income. And then those in the top 5% of income, 10, 50, and the bottom 50, top 50 and bottom 50. So to be in the top 1%, you need to make $515,000 a year. To be in the top 5%, you have to make $208,053. Hey, you remember that survey we did? And I asked, how much money do you need to make to be in the top 5%? Well, this is 2017 stat, and the quiz results that I have were for 2019. So the number's a little bit different, but I'm going to tell you right now, most of you way overshot how much money you have to make to be in the top 5%. It's not near as much as you thought. So let's go ahead and look on down the chart here. Top 1%, people making more than 515,000. People in that category made 21% of all of the income earned in the United States. So 1% of the people made 21% of all of the income made in the US. Well, they're making big bucks, right? These are people, this is only looking at people who make more than $515,000. They paid 38.5% of all of the income tax that the federal government collected. Think about that. 1% of the people paid 38.5% of all of the income tax that the government collected. And their average tax rate was 26.8%. Let's jump down to the top 10%. Top 10%, to be in the top 10%, you had to make more than $145,000. And keep in mind, this is based on tax filings. So if you are married and have dual income and you report in a joint return, which most married people do, this is households making more than $145,000. That's not a lot of money if you have dual incomes, right? Depending on where you live, for a husband and wife to both be bringing in $70,000 a year, or one to bring in $100,000 and one to bring in $50,000 is that's not that steep a hill to put you in the top 5%. People in the top 10%, so again, that would include these people as well. The people in the top 10% made 47.7% of all of the income in the US. They paid 70% of the federal income tax collected. So 10%, the top 10% highest income people in the US paid 70% of all of the income tax collected. Their average tax rate was 21.5%. If you look at all the people in the top 50%, to be in the top 50%, it was in 2017, $41,750. Now it's $50,000, somewhere in that range. I'll look it up and give you some more numbers when we talk about this later. But people in the top 50%, excuse me, made 88.7, let's call it 89% of all of the money, all of the income in the country. 50% of the people made 89% of the money, and they paid 97% of all the federal income tax collected. 50% paid 97% of the tax collected, and overall their tax rate was 16%. The bottom 50, people making less than $41,750 per year, made only 11% of the income. They paid 3% of all of the taxes collected. So the bottom 50% of the population of the tax filers paid only 3% of the tax, and their average tax rate was 4%. So by looking at these numbers here, this confirms, and this is actual tax filings. So this is after all tax deduction, all exemptions, all credits. This is what you made and how much tax you sent in. When you look at this, you can see at the end of the day, the federal tax system is in fact progressive, and that the wealthy paid a lion's share of the federal income taxes collected. Now, all the time you hear politicians talking about the rich aren't paying their fair share. Well, definition of fair is really debatable, right? Is this fair? Should the tax system be more progressive? There's a lot of people out there who believe that's the case. It should be even more progressive. Or is this unfair because it's taxing the rich too heavily already? That's where a lot of the politics, where the arguments come into play. But I want you to take away from this that the federal income tax system is designed to be progressive, and it is in fact progressive. Now, if you want to make an argument that it should be more progressive, go for it. Okay, other taxes that you will encounter. First one is FICA. You've seen that on your paycheck. Federal Insurance Contributions Act. This is commonly known as Social Security and also Medicare. Out of every paycheck, 7.65% of your pay will come out to pay for Social Security, to contribute to Social Security and Medicare. And the employer also has to pay 7.65% of everything they pay you for FICA and Medicare. Another form of tax that you pay is property tax. This is taxes on your car and your house primarily. Sales tax, you all know about that, right? Every time you go to Walmart, every time you order a pizza, sales tax is on the receipt. Excise tax. Excise tax is tax on specific goods that you purchase. Generally or historically, they're considered luxury goods. And it's kind of hidden. You probably don't realize how much excise tax you're paying. Excise tax is on every gallon of gasoline you buy. It's on cigarettes and booze. And it's on some other things as well, but those would be the ones that would probably impact you. So let me back up one step. The federal government collects income tax. That and corporate taxes are their primary sources of income. Property tax, sales tax, and excise tax is how county and city governments collect taxes to provide city and county services. So completely separate programs. Average effective state and local tax rates in the US. So this is looking at property taxes, sales tax, excise taxes, and what it shows is that the people in the lowest 20% of all income groups pay 11.4% of their income in local taxes. And if you go up, let's look at the top 20%. Well, we got to blend those. The top 20% are paying about 8% of their income in local taxes. Wait a second, look at this chart. That looks like that, right? And we said that's upside down. How could you ever have a regressive tax? Well, we have a regressive tax. Federal or local and city income taxes tend to be regressive. Sorry, stumbling there a bit. This chart breaks them down. If you look at state income taxes, you'll see they're 0.1% for the lowest income groups. And as you make more income, the state income tax percentage increases. That's progressive. That makes sense. Take a look at property taxes. Property taxes for the lowest. And they also factor this. If you rent, you are still effectively paying property taxes because the building owner is going to build those property taxes into your rent. So indirectly, you're still paying property taxes, and you also pay property taxes on your car. If you look at this, the more money you make, the less property taxes pay as a percentage of their income. Now, why is that? Well, let's say you're an average person here and you own a house that is worth $200,000. Let's say you make $100,000 a year. Down the street on the other side of town, there's somebody who makes $1 million a year. They make 10 times as much money as you do. Do they have a bigger house? Yeah. Is it 10 times bigger? If you have a $200,000 house, do they have a $2 million house? Probably not. You know, they might have a $500,000 house or maybe even $1 million house. But your property tends not to go up proportionally with your income. And that's why poor people tend to pay a higher percentage of their income in property taxes, because their housing cost tends to be a higher proportion of their income than with a wealthy person. Sales and excise tax. If you look here, look at it by income group, this red chart, this is really, really regressive, right? Why is that? Couple things. If you make, $20,000 a year, how much of that money are you going to spend each year? Probably $20,000, right? If you're poor, you end up spending all of your money. Now, let's go back to that guy who's making $1 million a year. How much of his money does he buy stuff with? Well, he's going to buy more, but is he going to spend his entire $1 million? Nope, probably not. He's probably saving and banking a lot of money. That's why a poor person spends sales tax. If sales tax is 8%, they have to pay sales tax on every dollar they make because they spend every dollar they make. Where a wealthy person only pays 8% sales tax on the portion of their income that they spend, which tends to be a lot lower percentage. Excise tax is similar, but it's even worse. First off, if you smoke, if you drink, wealthy people smoke and drink, poor people smoke and drink. So you're going to have that same impact of how much their booze budget is as a proportion of their income. You know, if people get wealthier, do they drink a lot more? No, probably not. They're going to have the same number of drinks on average than the poor people. Oops, nope, that's wrong, actually. You know what? Here's the real kicker. Poor people tend to drink more and they tend to smoke more. So not only do you have this impact that if they smoked and drank at the same level, it would be a higher percentage of their income. The truth is, poor people tend to smoke and drink more. It's just statistical fact. Therefore, sales tax and excise taxes are very regressive. So if I were king and I could write the tax rules of the universe, I would only have income taxes because they, in my mind, are the most fair. Property taxes, sales tax, excise taxes are very regressive, and I don't see how you can justify that. Also, on a personal note, property taxes kind of tick me off. So I own my house. I don't have a mortgage. I own my house outright. But you know what? I got to pay property taxes every year, or they'll take my house away. Does that seem right? I have to keep paying to stay in my house, even though I bought my house. Personal pet peeve. Okay, one last topic. When you hear politicians talk about taxes, a couple things you'll hear come up. One is a value-added tax. The idea here is that as goods are manufactured, a tax will be placed on the value added through each step of the process. Canada, much of Europe, there's a good share of the world that already has value added taxes, VAT tax. And they're talked about in the US. I don't like them. The VAT tax is really just another form of sales tax, because the more value or the higher cost of a good that you're purchasing, the more value added tax is going to be built into it. So it is effectively a sales tax. And as we just saw, sales taxes tend to be regressive. So I do not believe that a value-added tax is a fair tax or a way to go. Another tax that's being tossed around, Elizabeth Warren campaigned on this, Bernie Sanders is in favor of it, California is taking a serious look at it, and that is a wealth tax. By that, rather than looking at income, they're going to look at your assets. How much do you own? They're going to add up the money in your checking account, your investments, your car or cars, your house or houses, and they're going to come up with, okay, you are worth X millions of dollars in assets, so we're going to tax you on the value of the assets. We're going to, every year, you're going to have to pay a percentage of your total assets. This idea, this concept just makes my stomach turn. I cannot believe that you want to, first off, we're going to tax people when they make money, but then you're also going to tax them because they've taken that money and they've invested it. And so now you're going to take a little cut of what they've invested every year, even though you taxed it when they made the money to invest in the first place. It also, to me, penalizes success and it penalizes saving. Smart people build wealth. So why do you want to punish people for building wealth? And the dumb people out there who spend all of their money as fast as they can make it and even go into debt, and they don't accumulate anything because they're just buying all this shit, they don't have to pay this tax. So they get rewarded for being stupid. Okay, that's my soapbox. Few comments about taxes. I'm out.